what do you think is the right valuation metric to pay for a market with the current growth dynamics? Is it 15-year averages? Is it the last 3-4 year averages, or is it somewhere in between?
See, reality is interest rate. The real interest rate is your force of gravity in the market. And in India, you've seen interest rates will typically tend to peak out at 8% on the 10-year, and it typically tends to bottom at a 5% on the same 10-year. And if you apply the reciprocal of that, if you do 100 divided by 5, the market tends to top out at a 20-time multiple. And the same reciprocal, if you do 100 divided by 8, we tend to bottom out at a 12.5 multiple. Now, if our view on interest rates is going to change for the world, which the West did by artificially suppressing interest rates and driving them very down, but fact of the matter is, if the US, 5-year and 10-year is closer to 5 rather than 2, which they had forced it down to, it makes a case for a reset of valuations downward globally, not just in India. And the India-US differential, because they still have the money printing power in the world, has to then get maintained, which is why RBI has been in a tight spot on both the rupee as well as on interest rates. So given this turmoil, I would err on the side of caution, because the only thing an investor has in his or her hands is the price we pay for entry. After that, everything changes. The macro changes, the company changes, the competitive dynamics change, the sentiments in the market can change. So only the price you pay is the true reality. And it has to be a price which is so compelling that the sector I may feel most bearish about, I should feel like buying. That really is the price signal that you ought to be waiting for if you want to buy something. So it won't happen to the entire market in one go. It's already happened in pockets. I still feel financials is very, very lucrative. If you look out 5 years from now, whatever happens to AI, whatever happens to technology, whatever happens to sectors and so on, will some of these companies be around in 5 years? And do they look like 5 years out, these are 5P stocks? So that's just as an example of how to think about it.
Let's get that view in. I think more than the internal budget, India needs to be ready to respond to whatever comes our way.
Yeah. So look, I'm no expert in this, but I see this, that when you're playing with the big boys, and it's clearly a fight between US and China and the two autocratic guys, Trump's behavior is very similar to Putin. If Putin says, I want to go and take Crimea because I want access to the sea, and Trump says, instead of war, I'm going to go and buy out Greenland. I mean, this is bully behavior in the world. And that's how they're choosing to play the game. So in a world of autocratic leaders who have to fight amongst themselves to say, who's the boss, we will have to learn how to navigate this, because we are not trying to be boss for anybody. So the way we played it when the war happened and we managed to get cheap oil from Russia, or when the war is happening in the Middle East and we're navigating both the Arab as well as the Israeli side very well, I think that India is playing its cards pretty okay. And we don't need to try and overstate our position. Our growth will happen. It will happen inevitably. But we just have to be a lot more thoughtful and conscious about it.